Futures and forex trading contains substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please take a moment to review the full disclaimer. Hello traders, Kevin from chartspots.com. Today I want to take you through an explanation and presentation about trend days, and more specifically how you can recognize them early on. As you know, they offer great opportunity, as you can ride the wave, as they say, by money that is either coming in or leaving the market. There are clearly some important things to take note of. So with that said, let's have a look. The first thing I personally take into account is the prior day, the prior session. What happened in the prior sessions? Was the market balanced overall? Was it imbalanced? The example you see here is how a perfect balanced market would look like. That doesn't happen too often, but it does happen. You can have multiple days of this, of course. And a market, like I mentioned here, it always moves from balance to imbalance and back. So that's an important thing to take note of. Also, something important is where did the market close at the prior session. Let's say you didn't have a balanced day, but it was imbalanced. You had multiple distributions. But let's say this was the volume profile that you ended up with, and you closed right here at the bottom. This often leads to some continuation, as it implies that the market auction was interrupted by the close of the session. So those are all little nuances you should take into account when you form your picture of what the market has been doing in the prior sessions. The next one I look at is the overnight session. So let's say you trade the ES or the FDAX. The ES has a Globex session which runs through the whole Asian and European session. So that's important to look at what happened there. Were we in balance or not? Was there price discovery going on? And what happened? Where did we end up? What happened in the other markets? If you're trading the ES, it's useful to have a look at the European market, especially the indices like the German index or the Euro Stoxx 50. If you see that there was a risk on, basically money being allocated to risk assets, it increases the probability that that will continue. However, that's not a given. Nothing is a given in the market. But if you're seeing a risk off day, you see safety assets getting a bit like gold or the bonds, and the index is going down. You're trading the US index. Might be a bit careful on the upside before going all in, let's say. So those are all important things to take into account. It doesn't mean when you have a trend day in the European indices, that you will have one in the US. But I do think markets are linked anyhow, so it does increase the probability a little bit. Moving on, the opening. So there are some important clues to be gathered from where the market opens. The most important one, of course, is when you open in a gap. So let's say you traded in this range the prior session, and today you're opening here or you're opening here. It means there is an imbalance in the market, which might get some correction and then a continuation, or we return into the prior day's range, of course, but the odds favor a continuation in the direction of the gap, but still it's important to monitor the early auction, how that transpires, because those are important things. If the market does retrace inside yesterday, the prior session, and finds acceptance there again, then of course your trend day down or up is decreasing in likelihood. In the reports I have, I also look at opening within value or above value, but within the range. There are some very important clues and statistically calculated significant things to be had there. So if you're interested, you can download a free sample for most of the indices on my website, so do have a look. Next point, catalysts. This can be anything depending on the product you're trading. If that's the ES, for example, you might take note of specific news that impacts the global economy or the US economy. So it's either news, but you also have known unknowns. What do I mean with that? For example, the jobs report, the non-farm payrolls in the US, or a Fed meeting, the ECB meeting. Those are all things that are known unknowns. You know when they come, but you don't know the outcome. So those are important things to take note of, as they can impact what traders do and institutions do concerning their positions. And this depends on the product you're trading. If you're trading oil, for example, of course the jobs number won't make much of a dent, but if you get the inventories report, obviously that will move the market, or has a high probability of moving it. So those are all things you should be taking into account and know what is coming. News could also be a certain press conference that will happen, and of course there is unknown news that can pop up every moment and change the complete auction, of course. So that's important. Then the next thing I look at is how does the day develop? What do I mean with that? Is there any respect for day time frame levels? What are some examples of that? The overnight high and low, the prior session high and low, the settle, the open, the mid price of the day, things like that. If you see respect for them, and with respect I mean they turn into support or resistance, that is a clue that day time frame or shorter time frame traders are in control. And of course, a trend day does not start with day time frame traders. A trend day is basically when buyers or sellers get aggressive and they pump in new money or they take it out, which causes movement in the price and the value. So that's what you're looking for, and that's also why I mention rotations. Do you see bigger rotations than what is typical for your product? This is also something I cover in my premium report, what the typical rotations are for the products. And similarly for retracements, if you're in a trend day, you don't tend to have many or very deep retracements. That's also an important clue to take note of. And then also important, if you're using this, the volume profile. What tends to happen on a trend day is as price starts moving in a trend, what you get is a profile that keeps adding new distributions, and basically in a trend day the point of control, which is the most traded price, it will keep moving upwards, and it typically will not retrace the prior small distribution. And like I mentioned, also the regular volume is something you should be looking at. As I mentioned, a trend day develops because money is entering or leaving the market. This should translate in increased volume for the product you're trading. If that's not the case, then most likely you are not looking at a trend day and you might start retracing. So those are the important clues. So to recap, look at the prior session, what's basically the narrative the market has been doing over the past couple of sessions even. What happened during the overnight, both in other markets similar to yours, and in the overnight of your own product, if it has an overnight session. Where do we open? Are there specific news catalysts or known unknowns that are causing or could be causing a move of money? How does the day develop? Are we respecting day time frame levels or not? Things of that nature, the rotations, and of course, how is the profile developing, and what amount of volume are we looking at? Is it above average or not? So what this all comes down to in the end is context is king. There is no one trick to know, yes, today will be a trend day. even if everything is aligned, all the stars are aligned, the prior session was balanced, you're opening in a gap, the other markets were trending, even then it can turn around and move all the way down. So it's always important to keep a flexible state of mind, and also take into account the statistics for your product, which will definitely provide important clues as to what typically happens on a given day, given the opening, given all the different rotations and things like that. So if you're looking for more info on that, have a look at my website. You can download a free report for most indices, and feel free to drop me a mail in case of questions. So with that said, good luck trading and see you next time.